Welcome back, everybody. So, this is going to be the watch list for Monday, March 31st, which will officially close out the month of March as well as Q1. Now, the first quarter of 2025 will have the worst market performance in the past 5 years. So, we got to go all the way back to 2020 to really see the S&P, Dow, and the Qs drop as much as they actually have. So let's take a look and see what we got going on from an economic news perspective. Tuesday, we're going to have some U.S. manufacturing PMI, some construction spending, ISM manufacturing job openings. So this is all going to happen relatively quickly when the market opens or shortly thereafter. 15 minutes into the market open, 30 minutes again. I can't say it enough, but my recommendation is do not be in a trade 10 to 15 minutes before news is about to drop. You will literally be able to watch the market stagnate, and then theta will start to eat away at some of the premiums, and then you'll see the news hit. You'll get a very violent candle, wick up, wick down. So you can't also put in a stop loss ahead of news, right? Because the market volatility is so high, all it's going to do is wick you out, stop you out of the trade, and then it can go in the direction you wanted it to go. It could go in the opposite direction. You just don't know. So let the news drop. Give it a few minutes to figure a direction as to what it's going to do. The minute the news drops, it's algorithms that are reading the news feed and then moving the market violently in one direction or the other. Now, you also have to remember that there could be a significant increase of volume, and then other times there is not. So just let it go, let it breathe, and then take a trade. We have on Wednesday, we'll get some unemployment, ADP employment numbers, factory orders, and then we have a lot of Fed governors speak this week. So you'll see that we have Tuesday, the Richmond Fed president. Then we have another Fed governor on Wednesday. Thursday is going to be a fairly heavy news day with jobless claims, U.S. trade deficit, and then final services PMI and your ISM manufacturing services numbers. And then again, a couple more Fed speakers. And then Friday, we'll see how this plays out. Friday might be a no trade day. A couple reasons why. One, we have the unemployment numbers coming out in the morning before the market actually opens. But then you're going to have Jerome Powell speaking. You have another Fed governor, Michael Barr, and then Christopher Waller. So this is going to be a big FOMC day. So I would encourage you, again, it's going to be, partially, a little bit later in the morning of the market open. But we'll just have to see how this plays out. Now, also, mind you, Tuesday is going to be Liberation Day, according to the current administration, where they're going to disclose what they're doing with all the tariffs, in which countries are going to be impacted, which ones are not, what goods and services will be impacted, what ones will not. You saw the fallout from the auto tariffs that went on last week, as well as the overall inflation and consumer spending that's coming in hotter than expected, as well as consumer sentiment, which is dropped to a 12-year low. So clearly, the consumer is concerned. And I would say at this point, they are highly concerned. So we're seeing spending progress, but it's more so in the services area and not in the overall purchasing of large goods. We'll probably also get some pull forward as auto dealerships are getting an influx of people who were looking to buy a car now, because the average car is going to go up in price somewhere between $6,000 to maybe $10,000, depending upon the make, model, and what you're actually looking to acquire. So let's take a look at some of the charts. Overall, I'm going to start with SPY, and then we'll go to QQQ. We gave back all of the gains over literally the prior week and a half. So we are right back to where we were at 553.50. I think if we fail this lower, we will have a new interim low that we're going to want to kind of keep an eye on down here, right at that 550 level, that if we have more weakness. Now, from a supply and demand perspective, we do have some demand here, but once we drop below 550, the market will clearly start gravitating toward this 543, 539, 530. So we'll have to watch and see what's happening here. Now, could we get a bounce? Absolutely. We're pretty much right at the level where we want to wait and see how it's going to hold on Monday morning. We'll watch the futures market, but if we get below 553, then they could start to push it down into this 552, 551 level. Same thing with QQQ. The market, again, gave up all of its gains and actually then some in the Qs. So this one here, I'm going to be watching this pivot low on the downside. Let me line that up a little bit better. There we go, at about 466.43. If we fall below this, 461, probably 460, definitely maybe even down to 450. There's not a lot of support here holding this up. And you'll note when we look at some of the individual names, they sold off tech really, really hard this week, especially on Friday. Everything was down 3%, 4%. I mean, that is fear in the market. Now, the weird thing is the volatility really didn't go up that much. Yeah, it moved higher from, 17, low 17 down here at 1699, 17, up through our first channel, 1783, 1933, up to 2156. So when I was trading with you guys on Friday, I just said, we're going to want to watch. Is it going to break out of this zone and keep moving higher? And sure as heck it did. And as it did, the market dropped. Now, mind you, we are back at a overall market low where we were, back here. Let's look at this. Tuesday, March 11th, volatility was all the way up at 30, 10 points higher than where we're at. Okay, so let's look at March 11th. Let's go to the Qs on March 11th and see where the market was at. On March 11th, we were right about here, give or take, right here at this level where we're at right now. So the market has sold off, right here was March 11th, lower on Friday than where it was when the volatility was 10 points higher. So what is that telling me? Well, it's telling me that I'm expecting volatility to still go higher and that they're going to keep selling into this uncertainty. So there's a component between fear, greed, and uncertainty, and really it's uncertainty that is driving this market, not knowing who's going to get tariffed next, not knowing, where is the slowdown going to occur, how quickly will the market slow down. We do have a gap below here on Tesla, so this one I would watch. We failed our level of 262. They did get some momentum and they did push it higher. If we take a fib, and I'll show you a couple fibs today too, just something to pay attention to, right? So you'll note that the 50% retracement from this low to this high is going to be at about 257, which ironically is right at the top of the gap fill. Now, when you have a gap fill, you will normally see the market bounce off the top of the gap, looking at overall support, or will it start to move through the gap to close it, which we would then hit our 50% fib. We fail the 50, then my next level is the 786 down here at 237. And then ultimately, do they take Tesla back down here to 225 or lower? I think time will tell on that one. Overall, Apple was performing quite strong throughout the week, especially a couple of those down days. We're getting a bit of a rally. But even when you take a look at Apple, clearly, we're falling back below our level of 217.73. I'm going to go ahead and just do a pivot low to the pivot high. And you'll note that we are right at the 50% fib level. So we will want to watch and see, are they able to hold this? I'm going to save this, so we will keep it on our charts for Monday morning. But do they bounce it here or do they fail the 50? And then here's your target or an interim target, which would be the 618. Okay. Let's look at what they did with Amazon. Pull that up real quick. This one, forget the 50% fib. They've already failed through all of these levels. So Apple's going to show you that it had more relative strength. Now, what I'm doing is I'm taking the most recent pivot low to the most recent pivot high. And you can see right here, they failed the 50, they failed the 618, they retested the 618, and now they pushed it all the way through the 786. And once they do that, they're usually going back down to where the pivot started. And that's exactly what they did. So we don't need to keep a fib on this chart. You will see that we are pretty much right back where we were here on March 21st, go back here, March 13th, go back here, right? March 7th. They keep bringing it down to this 192, 190 area. So again, I would look for a bounce. Now, if we fail the green zone, which is where the buyers are, and we get below 190, then definitely 188 is my next price target. There's nothing holding us up between these zones, and that's frankly how I like to trade, right? Am I going to have a bounce, or am I going to have a reject and then just keep heading lower? So we'll watch Amazon because I think that could be a good setup for us throughout the week. Google was actually the anomaly that couldn't find any traction at all. I mean, this one literally, not only did it lose, if we were going to do a fib from a pivot high to a pivot low, not only did we lose the pivot low, they are now all the way down here further in demand. So this is clearly on a downtrend, right? We had a low, a lower high, lower low, lower high, lower low, lower high. This high is still lower than this one. And then they reversed it, and then they lost everything. So really selling hard into Google, which is kind of amazing when you look back at price and history from an earnings perspective. But lots of fear with what's going on there as well as overseas. Let's take a look at Meta. Meta was holding up quite well, kind of like Apple, until it wasn't, right? And then again, where are we at? We are right back at our interim pivot from Wednesday, March 19th, as well as Tuesday, March 18th. Now, one of two things. We have fairly low level buyers here, 45-minute zone, 30-minute zone. We do have a 3-hour and a 2-hour, but everything else below that is kind of weak. So I want to watch and see, can the market gain some momentum to keep pushing us higher? Can we reverse this and push higher? Or are they going to sell into this? My inclination is they'll probably sell into this, grab some more liquidity down here before they try to move it up in the opposite direction. Let's take a look at NVIDIA. Chip sector, tremendously weak. But you'll note, again, same exact thing. We were able to push it up, hold it here in this 114 range to keep pushing up to 120s, and now we are right back where we started, down to 109. So the beauty of this is you have some really solid levels to trade off of. But if we lose 107.80, right, where the bottom of the buy zone is, then I think we definitely push lower back down here to 104. We do have some sellers, quite a bit of selling on top of us. So we'll want to watch how this thing over time typically likes to grind around like it did here for a couple days before it actually makes a move higher or ultimately lower. You can see the same thing here. It was just grinding here before it actually got the ultimate drop. The other one is AMD that I like to trade. We're almost to our price level of a 101. We break the 101, even though we have a lot of buyers here. I think that this one psychologically will go down to 100. And that's kind of where we were bouncing, rejecting, bouncing here. So we'll want to watch 101.71. Also watch it in confluence with NVIDIA. What is NVIDIA doing? And do they start to prop this thing up? But it's amazing that we got all the way up here in this channel at 115. And then you literally lost 10% of the overall value of the stock. It's dropped 10% in just a matter of a few days. What has been strong, though, has been pharmaceuticals as well as oil. So ExxonMobil is one that has been holding really nicely at this 117 level. I think it does have more energy and potential to go higher. Ironically, this one looks stronger than Chevron. So if you look at Chevron, this one has been rolling over a little bit more, but I think we could be at a decent inflection point to possibly take a long trade. I'm going to want to watch and see how the overall oil stocks do on Monday morning. But you'll note that we kind of have this bull flag going on here, where it's flagging to the downside on a 1-hour time frame, come to our level of 165.31, go long. Now, with the oil stocks, mind you, they move very, very slowly. So if you get into a trade, this is not like a tech stock where it's going to move exponentially in a matter of 1 to 5 minutes. These could literally take hours or half a day. So you have to be much, much more patient when you're trading the oil companies or you're trading the banks is another one. Let's take a look at Walmart. We've had a lot of success with this one. We're pretty much right back at our level where they've been bouncing at 84 84.64. Our bottom level was 84.01. And if we fail this, again, we're going to think through, overall consumer sentiment, but we do have a fair amount of buyers here. So I don't necessarily like a put trade. Right now, be a little hesitant on a call trade, but we only have 30-minute supply, 45-minute supply. So I think they could push this back up to 85. Don't know that they'll be able to get above it. You can see that they fail it. But if we get some market momentum, we can come down here to 84.64 on the open on Monday. I think this could be a good risk to reward for us to take the bounce, because you can see where they've done it 1, 2, 3, 4 times, right? Even down here. So we really want to wait, be patient on this one, and look to see directionally, can we pick up a little bit of momentum. Now, conversely, Target, another one to watch in Confluence, is actually breaking our level. And this one, I would not be surprised to see this head down to 100. There is not a lot of buyers in this one. We do have some overall demand down here. But if we start to break below this 101.76, then I think you could definitely short it. I mean, if I were to go look left, see if we could even find a price target, it's been a while, right? And so I think that this one psychologically, that people will just get nervous. We already broke this pivot low here. So we break the most recent pivot. I definitely think then, let's target something down here right around $92. Let's turn this off. But, that's quite a ways for it to drop. But again, on weakness, it's definitely a higher probability trade to the downside. Okay. Let's take a look at the banks real quick. Some of the banks holding up better than others, interestingly enough. Let's start with Citibank. Banks will start and kick off earnings in about another week here. But Citi holding my price level of $70.09 really well here. I think we could get a bounce. Let's do some fibs on Citi. You'll note that the bank's fibs have held up so much better. We're bouncing right at the 618, right? It's the red line, 69.91. So we're getting a bounce there. Banks also, if the economy comes in a little bit stronger than expected, and banks had really strong earnings last quarter, so I can't imagine that that's going to really change. Let's take a look at JP Morgan. I think we have the same scenario here. Just glancing at the chart, again, just do a quick fib. You'll see that these, again, are holding up better than the tech stocks, right? This one is still got a little bit ways to go to get down to the 50 fib. So they are not bailing on the banks as much as you saw. Amazon, they sold off the entire move. Google, they sold off the entire move and then some. They did the same thing in Microsoft. Now, Apple is a little bit stronger, a little bit more of a safe haven. So you can see JP Morgan, they did not sell off that much. Bank of America, more here, right? So let's just take a fib here from this pivot low where we were at up to this pivot high. You'll see that they have failed the 50, but they are right on the 618 at 41.01. So the 618 fib at 41.01 is right on top of my price target of 41.02. And you can see that's where it's bouncing. So where you have a fib and a price level that coincide, that should give you an extra degree of confidence that the level is relatively strong. Let's take a look and see what they did here on Wells Fargo. Same thing. The 618 pretty much almost lines up with my price level of 69.36. They're bouncing it at the 50 fib. So while the banks had a really good run over the last couple of weeks, they did not sell into it like they did with the tech stocks. One of the other notable ones that is usually like to be highly traded is SoFi. SoFi dumped harder than the others, primarily because Robinhood is going to start offering banking services, and they would have a very similar clientele. So you'll note that we lost the 618 fib. If we lose the price level of 1177, which it closed at 1174 on Friday, we're probably heading down to 1130, and then maybe back down into the $10 range, which with an ultimate price target in the lower right-hand corner of $9.82. So again, this one has a little bit more volatility because of the overall alpha, and it trades more like a tech stock. So you'll see that it had more of a sell-off, kind of like tech. But this one, just kind of keep an eye on it. A lot of sellers above, and it's a low price stock. So it's not uncommon for day traders who want to just trade the equity will do so. So those are some of the things that I'm watching for this week. All in all, I think we're going to still experience a little bit higher volatility as we approach April 2nd. And with that, just really see if you can wait for a trend. Don't get caught up in all of the market chop. Just be patient, wait for your price level, look for confirmation on your MACD, your EMAs, and your volume, and overall, drop your stops in profits if you're concerned. So as soon as your trade goes green, drop a stop in profits and then trail it up. This market is, been well known to reverse at a moment's notice. So I don't like green trades going red, but at the end of the day, I also want to try to maximize profitability. So with that, guys, have a fantastic Sunday, and I'll see you all tomorrow morning at 6 a.m. Pacific Standard Time for some live trading. Take care.